Greetings, Dr. Jeffrey Scott here. This is my weekend market update for May 21st, 2023. I'm actually doing it on the 20th. We'll see what time it gets posted. I title this, Will Fed Speak Lead to Market Pivot? You know, we've been talking so much about the Fed pivot and the market going up. What happens if the Fed doesn't pivot? Because the market has been going up in anticipation. Hence the title. My email address is hgsidoc@gmail.com. I welcome comments on the YouTube remarks area or via email. And in addition, if you can hit the like button and subscribe, that would be awesome. If you're new or you've never done it before, hit the subscribe button. Hit the alarm so you get notified when I post these. And I'll never bother you because I don't keep a mailing list, at least at this point in my life. So hope you have an awesome weekend. And let's take a look at the markets. As always, this is for education purposes only. If I talk about a stock, if I talk about a potential purchase, consider it to be education and not investment advice. There is no guarantee I'm going to take any trades I point out at being interesting. I'm a doctor, not a broker. I have none of the licenses that would allow me to manage your money or tell you what to do. I am independent. I have paid for every tool that I use, even wealth charts. And the tools demonstrated are those that I use in my daily trading. I've paid for everything, as I said. Trading involves risk, and you are solely responsible for any investment decisions you make. You know, the comment about wealth charts, I started as a user, and you see how much I use it now on these programs. Well, it's a major part of my daily trading. So it's kind of cool when you're a user and then you talk to the proprietor, Rob, and next thing you know, I get my stuff in there. I can share it with you, some of it at no cost, some of it's the paid marketplace, but I really think it's a great platform. Um, when I look at the week that was, and that's how I always like to start, it was a pretty massive week. If you look at this 5-day column, and I've highlighted the major indices, and the key to me was the Qs were up 3.5, the NASDAQ was up 3. That's a big week, folks. Russell was up 2, the laggard. Spiders were up 1.7. Then the slow pokes were the Dow and the NYSE, both up a lot less than 1%. Now, that's a pretty strong week any way you dice it or slice it. You look at the leverage fangs, I think it's 2x, might be 3x, was up 6%. And then natural gas has come alive. It was up 12.3%. Imagine if you're carrying a position in Boyle, speculatively options, what you would have seen with that kind of, or might have seen with that kind of a move. Now, Friday in red was not a great day. In fact, it was sort of the opposite of the week. Gold, which was down on the week, was up on Friday. The biotech, which was pretty flat, was actually up considerably on Friday. Silver, which was down on the week, had a great Friday. So for the most part, the major indices were down. The volume wasn't excessive or exceptional. To me, it was a healthy profit-taking day before a weekend when there's a lot hanging out there like the debt ceiling. Now, the other thing that tells a story is, did you know we're in a bull market? Qs are up 32 since the October 13th low. The NASDAQ is up 25.4%, and the spiders are now up 20%. So, you know, at some point you have to stop thinking bear market rally. This has been a pretty impressive rally, and hopefully it's got ways to go. Obviously, I'm not a perma bear, I'm not a perma bull, and obviously there's risk, and we'll talk about that. If one looks at 5-day performance on the sectors, technology, no shocker, and communications leading. Financials actually had a good week. I guess no banks blew up, and that's going to make a difference. Oops, my headphone battery just died, so hopefully everything will be okay. I switched out headphones after pausing it. But again, a big week on communications technology. The financials are interesting, and consumer discretionary up. And when you look at what's down, real estate, utilities, healthcare, and staples, what are those? They're defensive. What does that tell you about the market? I think there's something to be said. If we look at breadth, there's lots of ways I look at it. And to me, breadth is important. One of the things I like to look at is on a daily basis and using the Q Edge tools from my good friend Sager at superiorprofit.co, no M, .co, is what percentage of the sectors, industry groups, and stocks were up. And you could see on Friday, 82% of sectors were down, 73% of industry groups, and 65% of stocks. Now, if we look along the week and we look at the 5-day, you can see it was a pretty good week. So the weakness really came in on Friday. And across the board, sectors, industry groups, stocks, about 2/3 were up on the week. And in fact, if you look at the last 2 weeks trading days, it's 50-50. But we're still in the setting of a month that has been, certainly on the big scale, when you take away the large cap techs, has still been relatively negative on a breadth perspective. Now, you don't see this very often, but if you look at the stocks in the S&P 1500 and you ask how many are above or below the midline of their Bollinger Band, we are at 50-50. And so there's really no signals here about overbought, oversold, any emergent reversion. I just see one day of profit taking and what feels like a climb the wall of worry, maybe heading into a melt up bull market. One thing that I saw this week and last weekend I talked about all the talking Fed heads is they clearly used the podium to talk up rates. You can see both the 10-year on the left, the white line, the 30-year on the right, the white line, moved up pretty sharply. And interestingly, the spiders followed them higher, which is not what I would have expected. I think they're concerned, at least the Fed heads, that the market is projecting rate cuts that they're not projecting, and the market interest rates spread versus the Fed rates became excessive, and they're trying to talk them back, and they did. What about recession? Look, I still would bet, based upon the data, that we have a recession coming, but I don't know when. Is it third quarter this year? Is it second quarter next year? And I think that matters a lot because when a recession comes, the market's going to have a tough time. But we don't have a recession yet. And these are just looking at 10 versus 2, 10 versus 3 yield curve inversions. And the gray bars represent periods of a recession, which typically follow the reversion, but not the reversion, but the correction of that reversion. Why? Because what does the Fed do when the market slows or the economy slows? They cut rates. When you cut rates, you reverse the inversion, and usually that occurs in the setting of a tough market or tough economy. Same with the 10-3s. Down here, we're looking at one way of looking at credit tightness. Clearly, the 2008 economic crisis, the dot-coms of 2001, 2002, and the flash crash of COVID crash of 2020 all came with credit tightness. We've seen a little bit, but I don't see it getting much worse, at least yet, looking backwards. And then another sign that suggests we're going to get a recession, and unlike the yield curve predicting once the yield curve resolves, when you look at this diffusion index of economic activity, recessions occur before, after, or during. And every time it drops below 20, minus 20, you've seen a recession. Well, we've dropped below minus 20. We actually got back above it, but I don't see any other period going back to 1970 where we dropped below it and did not get a recession. But you know what? Maybe I need to stop worrying about a recession and let me worry about it when it happens, because the market doesn't seem to be counting on it. Breadth, I called it mixed. I think the Q Edge tools were negative. Stocks above the 200, stocks above the 40, even the 12-week new high, new low. None of them are at any extreme. They all ticked a little higher. Here's the buckets. Run an edge rater. There's your 50-50. And really very few stocks below or above. No signal from the buckets. Hindenburg omens. Now, you would never expect one, but we did talk about last week that the 9th, 10th, and in some runs the 11th, I saw Hindenburg signals on the NYSE, and that was bothersome. But if you look at what's happened, you're still seeing on the NASDAQ new lows, And at least by this determinant, even on Friday, you had more new lows than new highs. If you look at the NYSE, you had very few new lows or new highs, and you certainly look like you've had more new highs versus new lows, the opposite than the NASDAQ. Now, I did see elsewhere, and it may just be the NASDAQ 100, that we saw more highs than lows, which was a change and a welcome change. To me, this is a sign of still a volatile market despite what the Qs are doing. If I look at the performance, so imagine you could take a snapshot of the fundamentals of the market a week ago and then ask a week later, what were the fundamentals that predicted success? So the first thing is if you look at overall movement versus ERG, and ERG is combining EPS rank, relative strength rank, and group rank. Low ERG outperformed, and for the most part, stocks were positive. Low ERG is low quality stocks. Relative strength, the worse your relative strength, the better your performance. You had these spikes here, which are probably Apple, Netflix, and some of the others, NVIDIA, AMD. But this was a lot of junk off the bottom, but a higher week despite profit taking. We're not done with the Fed heads. Look at what happens on Monday. We got Buller, Daly, and Barkin speaking all before lunchtime. And then we have Dallas Fed Lori Logan speaking on Thursday before the market opens. You got some PMI. You've got Fed minutes from May. You got GDP, but that's a second reading. Probably won't be much of a surprise. Jobless claims. And then you got PCE related. So there's a lot of news this week. So we're not done with news-driven mania. And oh yeah, we still have lots of earnings. And in case you didn't notice, some of the retail got hammered last week. Signet Jewelers, Foot Locker, Home Depot, among others. So it'll be interesting to see. And when you look at what's driving this market, it's still a lot of technology, certainly semiconductors in the AI space. Some of the other AI stocks are interesting. And it's a lot of home builders. Home builders. Rates still high, but I live down in South Florida. We are seeing some of the prices come down a little bit, but it's still a pretty hot market. And I think the only way you can get a cheap mortgage is if you buy a new house and the home builder either has their own mortgage company or they're doing something to buy down the rate. So lots of earnings, judgment call to hold stocks over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. So just remind everybody, I do a weekly thing on stocksanddocs.com. Would love to have you come check it out. I typically will record them early in the morning or late the night before. And the people at becomeabettertrader.com run the site for me. They keep the mailing list, and they post them usually around 8:30. And if you sign up here, they'll actually email them to you. Thoughts. There's a lot of words there. So we limped into the weekend as inflation fears were stoked by Powell. Other Fed speakers raised concerns on future rate hikes and less guarantee of a pivot. We also got this debt ceiling thing. Now, we're all adults, and we all know that there's no way that the U.S. is going to become a default. So, worst case scenario, they kick the can with a short-term extension and lift of the debt ceiling. But who knows? I mean, McCarthy has so little support on his own side. Hopefully that's what happens, but I think it's going to continue to whip the market this week. And we're getting to the point where I'm not sure that anything except a clean debt ceiling extension raise can get done before the holiday and before the June 1st default time. Strong week for the markets led by the Qs. We already talked about that, talked about leadership, talked about new bulls. High profile earnings blowups, that was something that was interesting this week. Although the major indexes continue to look bullish. So markets love to climb a wall of worry, and they're going to have lots to worry about this week. The Fed speak, the minutes, the economic news, and the debt ceiling. So I'm conflicted. If I turn off the noise, the charts look very constructive at the index level, but there's plenty of weakness at the individual stock level. I didn't have any trouble finding stocks that were shortable this weekend. The news flow will impact short term, but I think on the intermediate term, we're grinding higher. The ultimate recession scenario is going to take longer to impact, but we'll adjust our stance as we see the market start to take that into account. So to those that are regulars, I don't think my story's changed. I have multiple long positions. They're not my typical size. They're smaller. I have tight stops, and I still got some cash. And I may grow the number of my positions or the size of the positions that I currently have, but I'm not sure I'm getting out of that stance just yet. This is a bull market that nobody wants to love, but it's hard to ignore. Hard to ignore those numbers for the Qs, the NASDAQs, and the spiders. So let's take a look at the charts. All right, so let me go into the indices daily, and let's take a look at what happened on Friday with the spiders, and then we will continue. So Friday opened up down here, and you can see we gapped up, traded sideways, and then sold off and regained a little bit. So if you think about what this candle is going to look like, it's going to be a red candle because we know the market opened up here and closed down here, and it's going to have small topping tails and small bottoming tails. So let's take a look at the candle. So there you have your red body with small topping and bottom tails. Now the good news and why you can still be bullish. Look at that 50 turning up, 200s turned up, volume not horrible, not bad. Closed just below the prior day's close, so the day was down, just a small amount, looks like 0.15%, way above the anchored VWAP, potentially out of this trading range. So I'm going to keep my stance and stay bullish with, I'm not ignoring the macro. Look at the Qs. Notice the sideways versus a clear uptrend after a small sideways pause. Qs still look good. Very similar candle, down 0.29% on the Qs. The Dows, which excited us so much on Thursday when they took out, or Thursday and Wednesday, the anchored VWAP from the highs. The Dows had sort of a inside looking day on Friday, still above, rising 50, Bongo still. So I look at these three, if I rank them in strength, Qs, Spider, Diamonds, nothing has changed. They're still, to me, more long than short. The Russell had a couple of days with bottoming tails, and then a sort of a shooting star looking candle. And this is on the hourly at the end. So let's look at the daily here. All right. Sorry about that. I was looking at the wrong time frame. The Russell still struggling below the 200. It did get above the 50 and it held, so maybe a little bit to be excited about there. Also down 0.61 on Friday, but up 2% on the week. The VIX, a green candle, up 3.53% looking at the UVXY. Again, down day in the market's not a big surprise. And, one thing that doesn't really fit is that if you look at the dollar, if the rates are going higher, then the dollar is probably going higher too. Dollar was actually down a little bit on Friday. Looking at commodities, dollar down, gold up, silver up. Okay, still below the 50 on both of them, a break above that. Maybe it's time to get more bullish on them. Oil going sideways here, probably could draw a pennant. We'll see if it breaks out of that. Natural gas looks different. Natural gas is now above the 50, although it was down a little bit on Friday, up 8% on Thursday. It looks like it's turned. We'll see how far it goes. Think about it. Even a run up to the 200 is a double, more than a double. That's probably not going to happen. Do we get up until the 10 range and run into this prior resistance? That certainly would not surprise me. TNX, the 10-year rates up. Again, talking the market rates up. That's what you see, still well below 4%. Weekly timing. No change in the spiders and the Qs. They're both green. The diamonds, I gave a caution in a green. Technically, they're green as they closed above the 30-week, but they really closed kind of on the 30-week. Let's actually look at that. Let's open up the data box. And what does it show me? Make sure I get the right day. Okay. $320.69 is the 30. Make sure I'm on the right day. Hold on, it's not. 333.92, and it closed at 334.19. So it's just pennies above. So I gave it a yield in a green. Russell still below the 30 period, and it's still with a red bongo. So nothing's really changed. More bullish than bearish, not perfect. TLT versus the spiders, and again, we watch this because we'd expect this to spike if the economy is starting to roll over. Still, if you look at the equal weight, spiders in the middle, Qs on the right versus the cap weighted, the equal weights point up to the upper right hand corner, the cap weights to the lower right. You can see the cap weighted spiders and Qs are still dominating. What's interesting, we're seeing coming off the bottom, this is only an hourly chart though, that the more broad XSD semis are starting to do well versus the SMH. And the 50 really not performing well against the FANGs. And then over here, just a way of looking at credit tightness, and it really hasn't spiked. In fact, it eased a little bit. If I look at the bull scanners and we start with the heat map, you're going to see that it was a negative day in the markets. Tesla actually held up well, and I'd rather buy things that are above the 200, but Tesla did take out the 50. It's a 20-point run, 25-point run up to that 200. The relative strength at OBV looked good. It's coming out of a squeeze with a breakout in momentum. I don't have any problem if somebody thought that it was time to buy Tesla. It's just going to have overhead supply and risk. If I look at Wealth Scanner, let's see what comes up to the top sitting here on the weekend. Just a way of slicing and dicing and having the industries come up. So the FANG, which was a leader on the week, look at this week. Let's just throw a weekly up here very quickly. Look at that candle. So if you look at it, we're really coming off the bottom. We are far away from that 200. Can go a lot higher, but when you see a run like this, you wonder when it's going to take some time to refresh. But certainly leading the market. Discretionary, partly because of the FANGs, and we're not going to get too worried about this inside bar on Friday, at least yet. Dow Jones Internet, so technology driven. Israel Innovative Technology, software, FANGs, Qs, Spider Growth, Triple Q, NASDAQ, Communications, Technology, Spiders, and Semis. Can I have technology is in the lead for 100, please? Just kidding, this isn't Jeopardy. They're all technology based. It's pretty clear where the money's going right now in the market. The question will be, are any of them buyable where they're at? The way I slice and dice the market is I use my CAT scanner. Simple reason. I have it programmed to find stocks that are in a weekly uptrend that sometime within the last 2 or 3 weeks had pulled back to some support, and now they're moving higher again on the daily. And they have to have some impulse, looking for energy coming in, looking for movement to draw my attention to it. So let me just tighten this up. To me, it's this CAT scanner that really put wealth charts to my first place in the tools that I use. So we could look at technology stocks. Now, my concern is they probably run a lot. And let's see if anybody is actually meeting my criteria. So you ran technology. We'll let it run through the system. You'll see a little shake. There you go. And Globant SA, don't know anything about this stock or this company. It's probably, I don't know if it's an ADR, but it's an international stock, maybe a French stock. And what do you see? Big reversal on the weekly on massive volume, a gap up on massive volume on Friday. Got to worry about that 200-day overhead, but that was a pretty impressive move. It's just, and look at that relative strength in OBV. It looks interesting. I would put it on my watch list. But where I'd want to buy this, and I hate to say this because it's not here, is I want to see this break above, pull back to the 200 and go higher. I think right here after a move like that, we might see this before it goes higher. So just my thoughts looking at it. CXM Sprinkler. Now this is an interesting stock. I don't know if it's an IPO. I don't know this company, so it's an IPO probably in 2022. But there's some things I really like here. So is it in an uptrend on the weekly? Absolutely. Bongo's been green for weeks. Did it recently pull back to support? Absolutely. And what is that support? It's the 50-day moving average. Did it move up on Friday? It did. And if you look at the last couple of days, we've had 2 days with high volume. We've had 3 breakout signals, and we've had 2 momentum signals. Relative strength in OBV. CXM looks very interesting and will certainly be one of the stocks that I'll be looking at as the week starts. Apple. Now we're getting down to 1 star, and it's not that it's not a great stock, but you had your 4-star day over here, the big gap up day. So Apple's in a big run. At 78, it's extended, but it's not too extended. I don't have any problem buying Apple here. I just have to recognize it's getting extended. Speaking of extended, here's one that we talked about last week. Why? 1, 2, 3, 4, 5. It was just broke above the 50, and then on Monday it took off and moved. And look at the relative strength in blue, the OBV in red down below. Now, here it's the high jumps at 100. This thing's extended. So what does that mean to me? Doesn't mean it's bad. It doesn't mean I got to sell it. It means I don't expect it to go up right away. I expect it to either go sideways before it goes higher or to maybe give me a little flag before it breaks out. I can deal with either of those, but I can wait till it gets above that level to buy them. Now, of course, I could be wrong. It could gap up on an acquisition if it made one on Monday to 752. And the only reason I say that acquisition story, I'm going to leave that there, is historically that's when AVGO Broadcom has had its big runs. Cisco, well, let's go back to CrowdStrike. So CrowdStrike is at a buyable location. Broke out above the 200. I don't like the topping tail, but it was up in a negative day over 2%. Relative strength in OBV, yes, I wanted to buy it here. When it broke above the 50, had my EMS in 2 dots, and the relative strength in OBV started to move as well. That one looks very good. How about an old name, Cisco? Why not? Cisco is breaking above the 50s. Now, I am not looking at fundamentals here. I am not looking at earnings dates. I would not enter a position day of, day before, or anytime close to earnings. I typically hold during earnings if I have a cushion. I can't have a cushion if I just buy it today. So I would check earnings dates and make sure. But look at this, breaking above the 50, coming out of a squeeze, a bunch of green dots, 3 days of really heavy volume, and relative strength in OBV turned up. So just by looking, here's Fortinet. This is another one that I think looks really good. Now, is it extended? We come down here, it's 82%. It can still get higher. And you look at this, no, it's only got 1 dot. Of course it has 1 dot. It had the big dot day back here. And you don't get the big dots every day. And the longer you're in the move, you don't get many dots. Doesn't mean there's anything wrong. So there, looking at technology, I found 3 to 5 stocks that made sense. All right. Communications are strong. Probably the same story too late, but let's just look at communications. And the only two that came up are IPG, and I don't like the pattern already. It's a W, not that that doesn't mean it can't go higher, but it's kind of choppy. And Zscaler. Um, in a downtrend, nice little run here, running up into the 200 probably doesn't work for me. So then I might look at a broader thing. Let's look at the NASDAQ 100. Why not? The NASDAQ's leading. This is the beauty of the scanner. Set up what you like. Where I looked at it, we looked at the top four. Let's just look at DocuSign. Bottom, it's too far down the pattern. It's below the 50 and the 200. Maybe it's going to work, and I could buy it when it breaks above the 200. We looked at Fortinet, and then Micron is another one of the semiconductor stocks, and they must have a story when it comes to AI and the need for chips. All right, well, let's look at my combo list, a list of some of the stocks that I put together that have technical and fundamental strength, and let's see what comes to the top. So again, you can go and look at thousands of charts. I already did that this weekend. Or you can just scan and look for specific signals that are the ones you like to trade. We looked at Globant, ABB, sort of I used to think of them as brakes and automotive stuff. A Swiss company, nice uptrend. It's an ADR, so it's very gappy. Um, Getting extended. Doesn't look as much here. Look at the weekly and look at this at 92%. Here's that sprinkler, which I like a lot. IONS is, I believe they're in the muscular dystrophy type space, biotech, and with Sarepta getting a positive response from what's called I don't know if it's an ODAC, but it's a meeting before the FDA where they have lay people review the data. I think others in the space have gotten a lift, and you could see here's a stock that has come well off its highs, closer to 50. Got to get above that 200, but that's a powerful day, high volume, lots of green dots over the last couple of days with that volume, strong relative strength in OBV. I have no problem buying that. Personally, I'd probably reduce my risk and wait till it breaks above the 200 and maybe retest. Biotechs are tough because you have to deal with not only the market forces, earnings reports, but you also got to be aware of upcoming news. But where biotechs are exciting is when they get bought out. LIN, I believe this is a specialty chemical company. What a great move it's in. Here's your little pullback and pivot and breaking out here, two green dots. Not much on relative strength in OBV. I'd be watching that. Here's one I like, Lamb Weston, which I believe is an agricultural space. Now, it's been in a massive run, so you'd expect it to be extended, but interestingly, it's not. Had a little pullback into the 17. Don't see much on relative strength in OBV, but that's one I would be watching. We've looked at Apple. I don't know Applied Digital. It had a major move, but I don't chase, so I'm going to not look further. Just looking for other names here that I saw over the weekend that I thought were great. Innovia is another biotech. Now, this one exhibits something that's worth talking about, especially when we talk about IONS and others. I don't like buying stocks below the 200-day moving average. Now, to be fair, if you're going to, I bet every winner at some point was below the 200. But, there clearly would be a laggard, and I think the odds are less with you when you buy stocks under the 200. Plus, it's major resistance, or it can be. So here's a stock that's had a massive sell-off. And if we look at it, and this is an oncology-related company, and it's probably running up because of ASCO, which I mentioned during the week on my Stocks and Docs video. So if I was looking at this stock here, and I did look at this stock, and I looked at it, I would have said to myself, I've got big volume, my EMS above the 17 and the 50, volume, breakout momentum, in a squeeze. I ignore the extended here because I'm below the 200, and I think that these things are also close together. It doesn't take much to be extended, and I ignore that. Extendeds are when you're really up high or low. They're not when you're sideways. Relative strength and OBV look good. And I might be sitting there going, I want to take it. But then just like I said on a different stock before, I would be concerned, you know, about what's going to happen. My guess is it's going to go up and stutter. Okay? So why would I want to buy that? Maybe it goes up and it comes down. Why would I want to buy that? Maybe it goes up and then it's going to bounce around here and go higher. I want to buy this pullback before it goes higher. So let's look at the next dot. Let me take my stuff off. Up, we already ran up to the 200. Nothing's changed in my mind. Next dot, we broke above. So now I would be looking to enter. Now here's your little pullback. So now I'm going to draw a line. I'll just draw it freehand. I sort of had a line here, a little flag, and I'm going to look for it to break above that. And now the stock would have broken out. If I was watching it, I probably would have taken this breakout. I think this is something you could look at. So if you go back to ions, you could buy it here, or you can do what I would probably, not probably, this is how I would trade this, but this is just my trading style. I got to believe that odds are this is going to happen. It's going to run up to 200 and it's going to drop. That's how look at this. Can't get above the 200. All right. So that's one of the options. Is it either going to drop, going to hit the 200, it's going to go sideways. I don't want to be long if that's the case. All right. How about it breaks straight up and goes to the moon? Not going to happen unless it's a takeout. But what likely could happen, it just like IONS, break out, pull back, and then it starts to run. And then I'm going to look at this point here, and that is where I want to go long this stock. Now you look at that would be 40.43, and the stock is right now 39.19. So I'm giving up $1. I am giving up $1, but I'm also giving up a lot of the risk. Because if this is what happens and it pulls back and starts to go higher, the 200 is now support, it's not resistance. Just my style of trading. And I've done this long enough that when I see a bar that looks like that, unless there's something going on with a trade, it's going to pause a little bit. Looking at the rest of the list to see if anything really popped up. Here's a big dividend payer, like big. I think it was 12% or something. Let's see if they have any dividends here. So earnings good, 45 versus 43, up from 31, 4% surprise. Well, that's not good. Lower weight. Market performed 15. Dividend 4 cents. Now that's interesting because my other source suggested it was 12%, which would be $1.30, $1.40, unless it's given every month, 33 cents. All right, so the dividend varies. So I'd want to go look at that more, but look at the pattern. It broke above the moving averages, pulled back into them, and now I'm moving. I have no trouble looking at a stock like that. I'd have to make sure the fundamentals and the dividend are worthwhile. Clear skies above, no overhead supply until I get back to March as an example, and I've cleared those moving averages. Let me go look at the buy list. This is a list that I spent some time with, and there's all kinds of stocks, and they're not all setups to buy right now. And on my buy watch list, we've looked at every one of these already. Isn't that interesting? Let me take off the filter. Let me just go into the watch list. So I'm not screening them. I'm just going to show you the ones I'm looking at and call out a couple of things. Adobe has moved right into a place that I like, which has just got above that 50-day moving average. These are old lines of resistance that, it's 20 points away or 7%. Amazon, just like a lot of the big cap techs, is moving up nicely. Nothing is better than NVIDIA in this market, but I was looking at some statistics today at price to sale, PE ratio. It is way overpriced, but you know what? Overpriced stocks can get higher. And oh, by the way, it's getting extended. One that I liked a lot that didn't show up on the earlier scans was Schrodinger. And why? Because nice, shallow, but uptrend. Big reversal last week on the weekly. Pulled into the 50, and then Thursday and Friday breakouts. Um, Short term, it looks extended, but it's not. I'm not calling this extended. When it's up here, I'd pay attention to it. Um, Great volume. That one interested me a lot. An old name from the dot-com boom. If you like buying things that have been, this is why the low relative strength stocks were leading. A lot of stocks are looking like this off the bottom, bouncing up. Not my kind. UTHR is another one, um, bouncing off the bottom. So there's a number of things here, and then I'll leave you with this one on the long side. Norvo Novodisc. This is one of the makers, Lilly being the other, of these diabetes drugs that, and coming from a guy who's lost 50 pounds on one of them, um, they're diabetes drugs, which a lot of chubby people, myself included, who have access to these because they're physicians or they know a physician, are taking these drugs for weight loss. They're amazing. Norvo Novodisc is the leader, and you could see the performance. The stock has run from 100 to 170 since October, the October lows. It's driven on those weight loss drugs. I found plenty of things that looked ugly, um, and that's not the right list. I'm not looking at that many that look ugly. Short watch list. Just to call out a couple of things. Um, Foot Locker likely to bounce, but there's a lot of retail stocks that sold off. Burlington, I checked the earnings dates. Earnings must be coming. So earnings are coming up, so that would probably keep me away from shorting this. But look at this break below the 200. Failed multiple attempts to go up, get above it. That looks to me like it's going lower. But with earnings, you can't tell. John Deere, this thing's well off its highs. But look at this bar here. Tried to get above the 200 and failed on massive volume. Ugly. Dick's Sporting Goods, if Foot Locker is bad, what's going to happen? This guy probably less likely to short this because it's coming up on the 200. Lululemon, another retailer. And there's another thing that nobody's talking about when it comes to retailing. Think of the millions of people who have student loan debt and have to deal with inflation on food, inflation on housing, and since March of 2020 or so, have been given forbearance and not had to pay their school debt. They're having to start paying their debt within the next 2 months, I believe. I'm not expecting the Supreme Court to erase all the debt, even if they erase 10,000. If you owe 180,000, looks good on paper, it doesn't affect. What happens when that seeks into the system? I think retail stocks are at risk. Both the charts look ugly, and that's a big problem. And then some of these storage stocks just look to me like they want to break down. And this is LSI, and the other one was Extra Space Storage, looks even worse. Um, so there's some things here to short, some things to long. Here's Tractor Supply also breaking down. Um, I think we're in for another news whipped week. I don't know that we're going lower. If I had to bet, we're going higher, but I can't predict this news. So I'm playing defensive, but I'm still facing long. Have an awesome week. We'll talk to you Monday morning.